another important video. In this video I'm going to be speaking about SMT, as you guys have been asking. And before I move forward, I just want to make sure that if you have not subscribed to the channel, I suggest that you subscribe to it because I'm going to be posting more helpful and insightful videos. So without further ado, let's just move forward with the video. SMT. Firstly, I want to make sure that you understand that it is not a strategy. It's only a confluence to your current trade idea. Suppose you have a particular trade in Euro USD or Nasdaq at a key level, all right, and you want to make sure that your trade idea is correct. Look for an SMT. That's it. It's not a strategy, guys. It's a confluence. It's a reinforcement to your trade idea. All right. SMT, smart money technique or smart money tool. It can be positively correlated or inversely, meaning negatively correlated. This part, inversely and negative correlation, I'll cover in another video. I just want to make sure that you understand this one, positive correlation, because if you understand this, it's more than enough. Actually, it's not so much of a rocket science or Da Vinci code or something which you have to decode. All right. Over here, as an example, you have Euro USD, which is positively correlated with GBP USD. Another example, Nasdaq, S&P, and Dow Jones, the US 100, 500, and US 30. They all move positively. And I want to make sure that you know that you have to look for SMTs at higher time frame points of interests. All right, like FVGs, order blocks, all highs and lows, previous day highs, lows, previous week highs and lows, previous month's highs and low, because over here we have a lot of pending stop losses, and you would have noticed if you trade continuously and consistently, you will know that these are the places where a lot of liquidity rests. All right, so here we have two types of SMTs: internal, which is the SMT at FVGs; external one, meaning the SMT at highs and lows. All right, I'll just give you a short little idea. Nasdaq and S&P, like I mentioned before, these two are positively correlated pairs, meaning if Nasdaq is forming a lower low, S&P shall form a lower low. Again, Nasdaq forms a lower low, S&P forms a lower low, Nasdaq forms a higher low, so S&P shall be forming a higher low, right? But here S&P fails to form a higher low, instead it forms a lower low right there. So this scenario right here is called as SMT. This is SMT, all right, because we have institutional sponsorship in this price leg. All right, you look for this at key levels and at the right time, because you'll see SMTs forming everywhere. Every single time frame you'll see SMTs forming everywhere. So you don't have to just look for like SMT at every single time frame and at every single price leg. No, whenever you're trading at the right time, just look for it. It just reinforces your ideas. So of course this is the stronger pair, so you want to be a buyer in this one. But if you want to be a buyer in this because your trade model formed in this, look for a buys in this one, because SMT in one pair is a turtle soup in another one. All right, we sweep the liquidity, turtle soup, close above, buy from here. All right, another example I want to give you. So you see these quarters right here, which I mentioned before as well in my previous videos. I use these to look for CRTs and turtle soups. This is Euro, this is GBP USD, GU, EU. They are positively correlated, correct? Key level, this one, key level right here. Q2, Q3, we have an SMT between EU and GU right there. Low, high, lower low, high, higher low, low, high, lower low, high, lower low again, instead of making a higher low like EU. So we have SMT over here. I want to be a buyer at the right time, at the right candle, at 9 a.m. exactly. All right, look for it during the particular time of your trades. Do not miss time understanding SMT. All right, suppose you find SMT at 4 p.m. Do not just trade that. You'll be a fool if you trade that. And look for it at key levels. Key level shall always be there. Key level can be an FVG, order block, breaker block, rejection block, all high, low, whatever. All right, let me give you one simple example over here, because I don't want to keep the video too long. Let's see if we have yeah, I've marked it actually before. So right here at the 9 a.m. candle, Wednesday guys, you know it's the third quarter of the week, which is high probability. Third quarter of the day, which is from 6 till 12. All right, 9 a.m. candle, we have a high and low and a high. Right, let's look at GU. What did we form here? At the right time over here, GU failed to make a high, meaning GU was showing weakness, right? So this was turtle soup, this was a failure swing. If you want to buy your if you want to sell, you have to sell above the opening, you should know, right? So this is a higher probability sell instead of this, because it's just a failure swing and it's below the open, or at the open, I would say. Anyways, I wanted to make sure that you understand this as one single example, because there is nothing more to it, guys. It's just reinforces your idea of trading. That's it. If you have a one particular pattern you trade, look for an SMT. If you have it, it's just more confidence to it. All right. So I hope you enjoyed the video. Like and share with your friends and peers, and I'll see you in my next video. Good luck and good trading.